let's shift focus. This is a CNBC TV18 exclusive. We told you yesterday that the SEBI board will meet on the 19th of June in the capital, and what CNBC TV18 learns is that the agenda for the board meet includes expanding the framework for the OFS, offers for sale. Given the success of this platform since its launch in 2012, the SEBI board is now keen to make it an attractive proposition for retail investors. Also on the cards are reforms for the primary markets, which I will read out to you. But in a minute, let's invite our guest, Prithvi Haldea, Managing Director, Prime Database, as well, of course, someone who has headed the Primary Markets Committee for SEBI. Good morning, Mr. Haldea. Thank you very much for joining us. What we understand is that SEBI is keen on enforcing that minimum shareholding law for all public sector companies. That announcement is expected that there should be a minimum 25% float. Now that will mean, we understand from our calculations, a good 55,000-60,000 crores of worth of shares coming into the market over the next 3 years. First of all, your comment on this step, and secondly, will that somewhat dilute the kind of market momentum we've seen?
First of all, on the move itself, I think it was long overdue. Once you have gone for listing, then I don't think anybody can enjoy any special rights. PSUs are commercial entities like other private sector companies are, and because primarily the ministries or the ministers concerned at that point of time were not too keen on large public shareholding, and also there was a fear whether the market can absorb that kind of a float, because some of these PSUs have very large market caps. A special dispensation was provided for them. I think the market has shown the depth over the years, and I think 50,000-60,000 crores is, according to me, peanuts, given the fact that we have the entire world market as well as domestic investors with the 50 times, 100 times the money available. Money is not an issue. I think if the offer is good, attractive, pricing is right, then I think monies would flow. So we should leave aside, the question of depth or it's impacting the market momentum. There is enough liquidity in the marketplace, and as I've been saying, the PSU divestment this time around should be actually focused only at the retail investors at a discount to the market price. This is public wealth going back to the public. There would be no questions asked, and we can bring in millions of new investors into the marketplace and also strengthen our domestic investor front. So I think the move itself is laudable, and the sooner we do it, and I don't think we need to give a 3-year time frame. They've already enjoyed a long time frame in terms of not diluting, and I think we should probably fix a time for 1 year and get going with this.
Okay. Mr. Haldea, good morning. So how do you think this move could enhance the government's divestment drive?
You see, government divestment as such is a huge subject, and we can look at divestment from various angles. For me, I think the priority should be first to exit, the stakes which are held by SUTI. There is no point for the government to hold on to the stocks of ITC or L&T or even Axis Bank. There was some little move last year to exit Axis Bank in a partial manner. I think we should get rid of all these stocks and raise 30,000-40,000 crores easily with the dilution, with the disinvestment of these 3 stocks. Second, we should look at this 25% enhancement of public shareholding for all PSUs which are listed, and I think that again is a move that would bring in more liquidity, more floating stock, and also result could also be a better transparency and hopefully better corporate governance going forward. The third is to look at the IPOs of the unlisted PSUs. We still have a large number of good PSUs which are not listed. Hindustan Aeronautics, RINL, just to name a couple of them. And I think there should be a move to look at divestment through the IPO route of the unlisted firms. Fourthly, which is not to do so much with the capital market, but I think a very important step that the government should take is to get rid of all non-strategic PSUs. Do strategic sales through a very transparent and open method. The NDA government did that partially, in its first tenure. The whole process can be made more robust and transparent, and I think the government should not only get out of all the loss-making PSUs en masse, but also get rid of all PSUs where there is no strategic interest of the government. So I think if you look at these 4 areas of moving forward in the next 2-3 years, it will, besides the objective of the fiscal deficit or raising money for the government to spend, I think it will do good to bring retail investors, deepen the capital markets, and make these companies more transparent.
And more efficient, I would assume, sir. I mean,
and more
really.
efficient, yes.
Absolutely. I mean,
and Lata, one more thing, you know, in the third year or fourth year, I think we should look at PSUs actually divesting 49%, just not 25%. 49% in favor of the public
point
market.
taken, sir. In fact, I would argue even more on a subject that I am very passionate about. For PSU banks, it should go way below that 51% to get in more efficiency and get the politicos out, get those companies under the banking companies, under the Companies Act rather than the Nationalization Act. But no, that will take me away from the topic for which we have invited you. You know, there are other changes which we are almost sure the SEBI is going to announce when the divestment happens. You know, that minimum 10% dilution if the market cap is above 4,000 crore used to be the rule. This used to make a lot of companies deliberately ensure that their market cap is above 4,000 crore so that they are asked to divest only 10%. Now, what we understand is that a minimum 25% dilution or rupees 400 crore will be insisted, whichever is lower, if the market cap is less than 4,000 crore. We understand that that rule will come. Is that welcome?
I think it will come. I think there is a great anomaly in this regulation. And besides the point that you mentioned that, you know, companies try to increase their valuation to be able to take advantage of the 10% dilution. The other thing was, you know, clearly speaking, suppose in case your market value cap is 3,500 crores, then you are asked to do 25%, but in case it is 4,000 crores, it's only 10%. Yes. So there is obviously this problem and a great anomaly in this guideline. SEBI has taken cognizance of this, and I think I'm pretty sure that this will be removed, and therefore this requirement of 400 crores or 25% would come into effect, hopefully in this board meeting, which is next week, and that would help a large number of companies who have good valuations but who are not willing to dilute 25%. You know, there are a lot of PE-backed firms, for example, that I've talked to, who want to come to the markets, but because of this condition, you know, there have been problems. And I think that would be a great enabler for IPOs to happen.
All right. So, because of most of these reforms that are expected, the OFS, the IPO reforms, do you see the retail interest pick up?
You see, retail interest will pick up backed on two things. Retail interest, as far as I look at it, PSUs should increasingly and aggressively look only at the retail segment. And I think there is, and you know, what does a retail investor look at? Quality of the company and the price. I think there are no question mark on almost all the PSUs which are listed. As far as the price is concerned, if you give a discount to the market price, I think retail investors will just queue in.
Okay.
As far as the non-PSUs are concerned, I think we will continue to be guided by the fact of institutional subscription to be the benchmark for retail investors to come in. And that's a good thing, because retail investors cannot take a call on the quality or the price.
Yeah, actually, sir,
I mean, they see a book, yes.
Yeah, I was coming to that point exactly. We understand that one of the changes that will come is that SEBI may double the reservation for mutual funds to 10% of the QIB book. Way to go, you think?
Absolutely. I think we have ignored our domestic institutions far too long. We should increasingly look at how to strengthen. We should not be dependent continuously on FII inflows and our markets almost, you know, dancing to their tunes. We have enough resources, enough interest in the domestic market. The mutual fund industry is not very large, but still growing. And I think they deserve better treatment than what FIIs get. And an increased quota for, say, mutual fund and insurance companies is definitely called for. And also for retail. So I think any move which is aimed at giving a slightly preferential treatment. When I say preferential, I'm not saying in terms of just price for retail investors, but also in terms of allocations. You know, in the case of private sector PSUs, one of the suggestions that I've made is that, which is followed in, you know, Hong Kong, for example, that in case the retail book gets oversubscribed by a particular number of times, then some part of the institutional quota is taken away from that bucket and allocated to retail investors. The whole idea being that you have to have a wider market, you have to have household savings to come into the market, and you have to look at retail not as a fringe investor, not as a side investor, but the focus should be, you know, all our policies and all our disclosures, everything is rotating around retail investors. But when it comes to actually doing them a favor in a kind, then we shy away.
Finally, sir, there's this rule that the anchor investor the SEBI may double the allotment of anchor investors to 60% of the QIB portion. How should we read that?
That again, I think is, if you remember, Lata, 7-8 years ago, we used to have discretionary allotment to institutional investors.
Yeah.
And when it was found that there were a lot of malpractices in that, then SEBI went the other way around and said that they'll also be entitled to only proportionate allotment.
Yeah.
Then after a couple of years, it was realized that you require some anchor investors, some long-term investors, some good quality investors, and therefore this anchor investors quota was introduced. Yeah. I see no issue in anchor investors quota being increased from within the institutional bucket, because these people are not only investors who are going to hold on to the stock, but they also support they also give the right signal in terms of pricing of the IPO. Okay. And whether it is 30% or 40% or 50%, let the merchant bankers and the issuers take a call on which investors, as long as the process is transparent and there are no scratch my back kind of deals where you make allocations to some selected anchor investors of your choice for some potential quid pro later on. I think as long as we are able to ensure some transparency in the process, I would support the move of increasing the anchor investors quota.
Fair point, Mr. Haldea. Thank you very much for joining us and preparing us to meet these changes that SEBI is likely to introduce when the board meet happens later this week.